find stocks that have outperformed and you bet that they will continue that outperformance. You have to be aware of your risk profile, right? That, can I live with that risk that, okay, stock market is a game that you play on the side.
Hello, everyone, and welcome to another session of Excel with Experts, where we discuss a lot of different topics, investment strategies with one of the best portfolio managers and about the nitty gritty aspects of stock markets. I am myself Abel Matthew Francis, and to join us today, we have one of the most influential women portfolio fund managers. She has worked with different teams such as HSBC, Edelweiss, and QPlum, and now she runs Right Research. I'm so glad to have been joined by Ms. Sonam Srivastava. Hi Sonam, how are you feeling today?
Hi, Bill, I'm good. And I'm also very happy to be on this session.
So is it basically like I recently buy high performing stocks and then ride the tide? Am I on the right track in understanding what momentum investing is?
Yes, so you have actually understood it quite well. If you try to understand it, it is just trying to find stocks that have outperformed and you bet that they will continue that outperformance. It is a behavioral investing philosophy where you're choosing outperformers and you are expecting them to continue to outperform.
Let's say I'm not a very good investor and I'm a noob into this new momentum investing strategy. Mm-hmm. So how can you explain this in a more simple term? Let's say noobs like me can understand it much better.
Use a very simple analogy that, I will probably talk to my 6-year nephew about it.
Definitely, that's exactly what I want.
Let's suppose there are Avenger toys that are, very attractive right now, and you see all your friends are now buying that. You can exchange 5 candies to get a Avenger toy, and you see that today you exchange it for 5 candies, tomorrow it is 6 candies, and after that it is 7 candies. So the exchange value of that toy is continuously increasing, right? Your mother might say that, it's a very expensive toy for 5 candy, but what might happen is that toy has picked up such a trend that, if you buy it today for 5 candies and you waited out 10 candies for when you're stealing that, right? So that is what you're trying to do.
Coming to something else that is more interesting that we would like to know again on our behalf is your journey in investing. I also realized that you're an alumni from IIT. Were there inspirations from there that you took up? How was your investment journey?
I studied chemical engineering, which was totally unrelated to investing. I started quite early. 10 years ago was the time when it was starting in India. So that was the time that, a lot of us got interested into this. I started doing momentum investing around 2016 or so when I was working with HSBC. Then I did a lot of research on Indian markets. And I saw that momentum is the strongest factor. So that works really well across time.
Now that we have a basic idea of, what momentum investing is and how it's based on trends and how that trend, you can ride the high of that trend and how it does better. Are there like the 3 basic rules or 3 basic fundamental rules of momentum investing? And if so, what would they be?
There are certain rules that you need to understand when you are doing momentum investing. Momentum is a rule-based strategy, right? And you should always follow a portfolio approach, right? So you shouldn't be just buying one stock because it has big momentum, because there is a lot of risk with one stock. You should include a set of stocks in your portfolio so that, even though one stock might have volatility, your whole portfolio will support it. Second thing is that, you have to just look at the previous, let's suppose 1 year trend or 6 month trend or 3 month trend and try to pick up those stocks, technical signals to pick up high momentum stock. Third thing would be you have to understand that if you are creating a momentum system, then you should be aware of the risks that are coming along.
I think a lot of diversification also comes with momentum investing, correct? So that you don't put all the eggs in one basket.
Right.
For what kind of investor is momentum investing most suitable?
There are risks associated with momentum investing. If you are, sort of collecting those toys and suddenly, something happens, let's suppose your exam starts and, nobody is exchanging the toys anymore, or let's suppose the pandemic hits. So there are risks that will come up with momentum investing, and you have to be aware of your risk profile, right? That, can I live with that risk that, okay, maybe nobody is buying my toy for let's suppose 2 weeks, but it might pick up value after that. So can I live with that risk, right? There might be times, when you have picked up certain stocks that, seem to have been doing very well and suddenly there is something that happens. Like recently we saw in IRCTC, right? That was picking up very rapid pace and suddenly there was some news and there was volatility. things like these can happen once in a while in momentum investing. So you have to be aware of that risk.
So momentum investing is basically based on a trend. Let's say, is momentum investing more suited for short-term investing plan, or is it viable, for a long-term investing plan?
Right.
How would a time factor actually play into momentum investing?
Momentum investing, what we do is we typically trade on a monthly basis. And we talked about the risk of momentum, but what is also very important is to understand the expected returns that momentum promises, right? So momentum is especially very good in those periods, when the markets are strong. Then you just have to pick up a trend and ride it, right? So that momentum is especially good in those markets. We have a momentum strategy that would have been running for decades and more, and it tends to perform really well over the long term. So that is what the benefit of momentum investing is.
When would be the right time or a suitable time to start your journey in momentum investing? When would that be?
When the markets are strong, you see momentum is giving returns which are exceptional. But yeah, when there is volatility, then momentum also goes through volatile times. So you have to be aware of the broader market conditions when you do momentum investing, because the India fundamentals are strong, right now the economy is strong. We expect the market to be strong going forward. So I think momentum would be a good strategy to keep on invested into the market during this time. Obviously, there are short-term corrections that happen here and there, but momentum is very robust during those short-term corrections as well.
Just a follow-up question. When you talk about risk appetite, does it make sense that a person on the age of a younger side, has a better risk appetite to invest in momentum investing? Because since they're starting out young, they have much less to worry about.
When you are young, you can take higher risk, but as you mature and you have a family to support, and as you get older, you try taking lesser and lesser risk. Typically, a person who is young can take higher risk. They fall into the high risk appetite category. And momentum investing is something that is very suitable, where they can expect high return for the high risk that they are taking. Momentum is a perfect strategy that fits into that bracket.
If a news about stocks come on the news and then you take a chance to invest, you're already too late. I mean, if you agree with that, how do retail investors identify a trend long before it's too late?
Whichever stock's price is increasing, you're investing into that, right? So even if the particular stock is showing like price has increased and some news has come and the price has increased, you are still investing into that because you expect the trend to continue.
When is the right time to exit in momentum investing?
Right. So when you are doing a momentum investing, like we said, you don't have to invest into one stock. You should have a portfolio of stocks. And typically how it works is that people have a universe, right? That I'm looking at these 100 stocks. I'm ranking them based on their momentum and I'm investing into top 10, right? Let's say this is a very simple strategy. Obviously, over time, stocks will come into that top 10 list and go out of that top 10 list, right? You will keep on adjusting your universe even though you are invested into this strategy fully. So what might happen is that, metals are strong or, certain sectors are strong, you'll be investing into that. And maybe after 6 months, let's say FMCG is stronger than metals and the sector shift. So your allocation will also shift within the strategy. Right?
You went from chemical engineering to your investing. Is there any way how that happened? Is there any interesting story behind how you were introduced into the world of investing when you were in chemical engineering?
I actually got my first job in chemical engineering where I worked at a petrochemical plant. It was a tough job working in the refinery, and I thought I liked working with numbers, right, more than anything else. And I started exploring financial concepts through the CFA because a lot of my batchmates were doing that. And then the quant thing really clicked for me because I liked working with numbers. I liked the interesting aspects of it.
Thank you so much, because personally, even myself, I am a person who has changed streams a lot ever since school. I'm really happy that you took the time to actually explain about momentum investing. So thank you so much for joining in. So that's all for today. And before we leave, our main question for today for you is, what age do you think is more suitable for you to start your journey in momentum investing? Leave your comments down below in the comment section and subscribe to the channel to know more about investing and to watch such masterclasses just as this. Thank you and have a great day ahead.